Next up, we have American Lithium presenting today. I'm Joe Fars, Vice President of Investment Banking here at Red Cloud, and I'm pleased to have Andy Bowering, the founder and chairman of American Lithium. This company is focused on the TLC claystone assets in US, as well as the Falchani lithium projects in Peru, and also mentioned that they have a very formidable uranium project that's adjacent to Falchani at Macusani. It's certainly one of the highest altitudes I've ever been in my life. And with that, Andy, why don't you take it away?
Thank you very much, Joe. Well, thanks for listening in. I might make some forward-looking statements. I would caution the viewers and the readers to have a look at our disclaimer at their leisure. As Joe has suggested, we have two advanced stage lithium projects, both in mining-friendly jurisdictions, Nevada and Peru. That's the TLC and the Falchani. We have one of the world's largest undeveloped uranium assets, a strong treasury, currently 17 million in the treasury, and closing a $35 million financing in the next couple of weeks, giving us run room for about 2.5 years before the need to finance, and a very strong technical team and capable management. It's been a big year for us. We came out of the gate strong. We announced a large resource at TLC in Nevada, 5.3 million tons measured and indicated lithium carbonate equivalents. We're in the process of doing metallurgical studies and flow sheet design. We've completed baseline environmental study, and we've secured water rights. We have 1,300 acre feet of water, 300 acre ranch that we bought, and we're currently trying to buy more water rights. We are a TSX Venture 50 company, #1 in the mining. We have 45,000 US shareholders. And as a consequence of that, we've recently made an application to the NYSE. Have about 182 million shares issued and outstanding. We trade north of $3. And so therefore about a 550 million market cap. Again, about 17 million in the treasury with another 35 coming in. Strong US retail shareholder base, and now we're starting to build on a big institutional following. I chair the company. I also run a company called Prime Mining, another Venture 50 company, and I was a former founder and director of Millennial Lithium. I've worked with Simon Clark, our CEO, for several years, and Simon and I were successful with M2 Cobalt and its sale to Jervois, and another company prior to that. From the Plateau side, and with deep experience in Peru, we've got Lawrence Steffen, our COO, Philip Gibbs, our COO, Ted O'Connor, with our uranium experience, and then several other people that I just don't have the time to mention here, but should really be followed up on. ESG matters to us. It's difficult to operate in Peru without good social license and engaging the community as partners. That's what we do, and discussion on that goes beyond the scope of this presentation, but happy to chat more about that at any time. Environmentally, TLC represents one of the more environmentally benign projects in Nevada. We are north of the desert tortoise areas. We are well south of the sage grouse habitat. No buckwheat issues on our property. Deposit sits above the water table, and it's ideal it's probably an ideal spot to have a lithium deposit in the high desert of central Nevada. TLC is about 13,000 acres. It's 6 miles northwest of Tonopah. That's a mining-friendly jurisdiction. 15 miles to the north, you've got Round Mountain, big open pit gold mine. There are no ranchers in the area. You have a 85 megawatt power plant 1.5 miles to the north of the project, and Tonopah sitting just south. You've got good access to limestone in the hills to the east. You've got soda ash from the Trona deposits of Wyoming, and we bought our own water rights. If it's a sulfuric acid leach that we go to at the end of the day, sulfur is available from the Gulf Coast. Closest gas pipeline 60 miles and closest rail about 100 miles. Paved highway right through the property. We filed a plan of operations in January of this year. We expect the BLM to approve that November 15th, subject to 30 days public consultation and final acceptance on December the 15th or thereabouts, allowing us to move forward with a much larger surface program of bulk sampling, some infill drilling as we finish off our technical and metallurgical flow sheet design. TLC claystones sit right at surface with very little overburden and are a sequence of about 60 to 80 meters of elevated lithium well above the water table. The advantage to TLC claystones is that they leach very quickly, and you can see by the slide on the right that our leach times are significantly less than all of the competitors. Low in deleterious materials, mercury, arsenic, and radioactivity, uranium. And we've been able to mechanically upgrade the claystone such that we take a 1300 ppm feedstock and upgrade it to 2200 using Falcon concentrators. That will play a significant role for us in the development of this project, like it has at Thacker Pass. We are working on 3 process flow sheets right now: sulfuric acid, hydrochloric, and a salt roast water leach. Sulfuric acid works for us. In an atmospheric leach, we can get up to 97% of the lithium out, but the leachate impurities are high. So your calcium, magnesium, potassium are high, and you've got to sequester those using liming and soda ash. And the complication, I guess, of the challenges in that is that a sulfuric acid plant's about a $250 million capex, and we've seen the community issues around it with Thacker Pass. Interestingly enough, we've been working on a salt roast water leach. We get almost 90% of the lithium out. The leachate impurities are low. Only lithium comes out. There's no need to sequester tailings or pH balance tailings in the end. However, the complications around this would be CO2 mitigation from your roasters. There have been 3 roasters permitted in the last 10 years in Nevada. And so we are not giving up on a roast water leach process. In fact, if we can drive this process through, it's probably the preferable route because it's very environmentally benign. I don't have to speak about the importance of a domestic supply of lithium in the US. China is buying up all of the world lithium deposits, it seems, and so the US administration is keen on getting their own supply. And so we're getting good support from local politicians and the governor's office and areas like that. Second lithium asset is Falchani. You can see the numbers from a PEA that was done a couple of years ago. These numbers do not include a claim called Okakasa 4 that represents 45% of the deposit. So every number you see on this page is without Okakasa 4. We are told that Okakasa 4 is likely coming back to this company, but without it, it's got 1 million tons of lithium carbonate equivalent indicated at 3,000 ppm. It's a volcanic tooth, a volcanic glass. Very high grade. You can see the numbers for the PEA. If and when Okakasa 4 comes back, the NPV goes to 1.5 billion. IRR goes up 6 or 7 points. Life of mine cash flow goes to $9.5 billion. OPEX comes down to 3,900. Significant changes, and that's something that we expect. What's key about Falchani is that it has already been through a flow sheet engineering and atmospheric vat leaching is able to deliver a battery grade lithium. They were produced a lithium carbonate battery grade on their second pass. Falchani is also high in a cesium credit and a potash credit. Potash sells at a premium in Peru. So it's worth doing the PEA around those two credits as well. But suffice to say that we are drilling right now. We own 4 of our own drills in Peru, and we have 2 to operate at Falchani and 2 to operate at the Macusani uranium deposits. We plan on upgrading the PEA in early 2022 to, we are waiting right now for the court outcome, which we are told is coming any day or any week on Oktoberfest 4. When that comes, the numbers here change significantly. As a result of that, we will refresh the PEA. We will also include the byproducts, and then we will likely move this through to PFS or FS level study. It's very clear that the government of Peru wants Peru to be a lithium producer, and this is a world-class asset that's got an opportunity to do that. The remaining asset that's in the company is something that we're really not in the business of, and that's this 5th largest undeveloped uranium asset in the world. You can see the strong numbers from a PEA that was done 6 years ago. There have been some significant changes since then. They are able to mechanically upgrade this at a 150 grind. They are able to upgrade the uranium to over 600 ppm. That significantly changes the possibilities for this 50 to 60 million pound measured and indicated resource, another 70 million pounds inferred. But this is a big asset. We are likely going to spin it off to our shareholders' benefit at some point in time, but I don't think that that's in the near future. We are drilling there right now to try and infill some of these areas, and then we will redo the PEA sometime next year, and then you might look for some sort of economic benefit in some form of spin out next year on this asset under different management and with American Lithium holding and its shareholders holding the value. Ongoing exploration right now down on the plateau, and excited to tell you all about what's coming in the near future. On a pro forma position, we are one of the larger measured and indicated lithium carbonate equivalent holders. These numbers will likely increase over the ensuing months. On a enterprise value, we are at the lower end of the chain. I think that this is changing a little bit now. We've had a bit of a share price movement over the last month or so. Again, our market cap now is closer to 550 million. I think that puts us in this area, but still a long way to go when you look at some of our competitors that are yet. Lithium America is now 4 billion market cap and yet to be in revenues. So again, strong fundamentals going forward. 2 world-class lithium assets, very large measured and indicated resource, a large inferred, both assets close to infrastructure and the ability to increase their economic condition. Good jurisdictions. You can see the near-term milestones. Plan of operations and the environmental assessment should come at the end of this year. Additional drilling at TLC, resource update, and then PEA feasibility. And at Falchani, expansion drilling, a PEA with updated products, and then a feasibility study to follow. And
Andy, sorry, I think yeah, just so that we can capture a question here. I know it is a tight time frame, but I did want to get a question in. Back on the TLC project, you had mentioned 3 different scenarios. Like, what's kind of driving the choice there? Is it more so lithium extraction and the percentage of recovery, or is it cost? Like, how do you guys balance what it's going to be going forward?
So we'll look at this through two different lenses, the economics and environmental. And so we believe that at the end of the day, even if an environmentally friendly method, maybe the salt roast and water leach, ended up costing us $200 or $300 more per ton in operating costs, that the industry would absorb that, because the world is looking for environmentally clean ways to mine these days. It's made very clear to us at the state levels in the governor's office that anything we can do to see TLC represented as, say, the economic or lithium poster child, and that's a word they're using. If we can get there, then ultimately that's going to drive the decision going forward.
That's perfect. Appreciate that, Andy. And apologies, we are at a time here, guys. That was a great presentation, Andy. I do want to thank you for making yourself available today.